Hi everyone, this is Dr. Nitin Chhoda and welcome to this important training video in which I talk about the new economic reality of remote work and key tax implications for both workers as well as employers. I talk about the new paradigm shift towards permanent remote work in some cases. I'll also give you an overview of state income taxes because there's a difference between your state of domicile where you live and where you have your primary residence and state of work where you actually work. And I'll also go over the state tax implications with remote work. If you are an existing subscriber, welcome back. If you're not a subscriber yet and you learned something new, please consider subscribing below and please smash that notification button and please click the like button if you learned something new because it really does help out the YouTube algorithm. With that being said, let's go ahead and get started. Now, next year, state income taxes may be the least of your concerns right now. You're probably thinking, hey, let me get some money coming in. Let me put some food on the table. Let me keep the lights on. I completely understand that and I would do the same if I were in your shoes. But I've had a lot of subscribers ask for this training and I do believe it's a good idea to live in the present but also plan for the future. Now, in the past 3 months, millions of Americans have had to work from home because they had no other choice. A lot of us had childcare responsibilities and a lot of us were basically told to work from home, which is what we're doing. Now that the summer's here and now that offices are starting to reopen, that desire to work from home is actually increasing because a lot of individuals want to continue to work from home. In fact, according to a recent study by Gartner, which is a leading research and advisory company, they did a survey of 317 CFOs and they found that almost 3/4 of the CFOs, that means almost 75% of these business leaders and thought leaders, wanted at least a portion of their workforce to continue working from home permanently. In fact, according to a survey by the recruiting agency Robert Half, they said that 6 out of 10 individuals who were working from home actually said that their work-life balance had improved and they preferred working from home. In fact, if you take a look at this chart on your screen, these CFOs, going back to Gartner, were asked the question, what percentage of your workforce will now remain remote permanently, whereas previously they were not remote? In other words, previously they were on site. As you can see on this chart, 27% of the CFOs said that 5% of their workforce would now remain permanently remote. 17% of them said that 1 out of every 5 employees, which is 20% of their workforce, would now become permanently remote. 4% of them said that half their workers would become remote, and 2% of them said that more than half their workers would now become permanently remote. Now, as you know, Mark Zuckerberg, the CEO of Facebook, has recently been in the news and he is a big proponent of remote work. In fact, Mark Zuckerberg specifically said that in the next 5 to 10 years, he expects 50% of Facebook employees to work remotely. Here's exactly what he said.
I do predict that over the next 5 to 10 years, we'll be able to get as much as 50% of the company working remotely.
In fact, all of these companies that are proponents of remote work are now sensing that there's a significant cost-cutting component to remote work because it's less expensive for a company to have an employee do the same work but do it remotely as having that same employee on site. In fact, Alexander Bant from the Gartner Institute specifically said, most CFOs recognize that technology and society have evolved to make remote work more viable for a wider variety of functions than ever before. Now let's get into an overview of state income taxes. Let me remind you, I'm not an accountant. I'm doing this to provide general information on my channel. You will need to talk to an accountant about specific questions related to your state income taxes. If you're not sure about your state income taxes and you're working remotely, now is the time to talk to an accountant because remember, if you self-file your taxes using some sort of an online software, you need to know all the rules because when you're filing the taxes, you're making an attestation that you're providing accurate information. And again, if you are working remotely, I strongly recommend that you hire an accountant so you get clarity about your state income taxes. So now let's talk about your state income taxes. If your living room, your spare bedroom, your kitchen, if any part of your house now becomes an office, it actually has state tax implications for you. Because remember, your state of domicile is the state where you live, is the state where you have your primary residence, but your state of work is the state where you're working. So if as a result of this pandemic, let's say you were living in New Jersey and you went to live with an uncle, an aunt, or a family member in Oregon, you now are subject to state income taxes, most likely in more than one state. So there are cross-border implications to your state taxes if your state of work is different from your state of domicile. So let's now talk about state income taxes for specific states. Now here's data from the Tax Foundation, which is a Washington DC based think tank that was formed in 1937, and what they do is they collect data and publish research studies on US tax policies at both the federal and the state level. It's a tax-exempt, non-profit educational and research organization. Now on the chart, you'll see the darker colors signify higher state income taxes and the lighter colors signify lower state income taxes. In fact, there are 9 states. One of them is Alaska, and that you can actually see those states here on the screen in a gray color. So on one side of your screen, you'll see Washington and Nevada, no state income taxes. You'll see Wyoming, South Dakota, Texas, Florida, with no state income taxes. And there are 2 states, specifically Tennessee and New Hampshire, that do tax investment income like interest and dividends, but they don't have state income taxes. So what are the top state marginal individual income tax rates in 2020 for different states? If you're living in California, California has a state income tax of 13.3%. If you're in New Jersey, your state income tax is 10.75%. If you're in New York, your state income tax is 8.82%. Pennsylvania, 3.07%. Texas, no state income tax. Florida, no state income tax. Georgia, 5.75%. Virginia, also 5.75%. North Carolina, 5.25%. Michigan, 4.25%. Illinois, 4.9%, and Ohio, 4.797% state income tax. So far we've covered the new paradigm shift towards remote work. Number 2, we've covered an overview of state income taxes. And number 3, we'll now talk about the state implications, the state tax implications associated with remote work. Now, with some states, as soon as you start working remotely in that state, you will owe taxes in that state. Now, if you're working remotely, that raises the question as to whether you, as a worker, as an employee, and your employer has a tax presence in the state in which you are working. If you or your employer have indeed established a tax presence in a different state, that could come with additional tax reporting obligations in the state in which you are working. Now, as if this wasn't complex enough, some states have reciprocity agreements with other states in nearby jurisdictions. Now, each state has a different rule when it comes to state taxes, and they take many different things into account. They take into account how long a worker works there, what income is earned, and where that worker's state of residence or state of domicile is. But here's the important thing that I want all my subscribers to understand, that no one really talks about and no one tells you. If you live in one state, that's your state of domicile, but if you work in a different state, even if you're just passing through that different state, that state of work, most states require you to pay state income taxes even if you are just passing through. In fact, there are 24 states that require you to pay tax even if you work there for a single day. Now, this is significant if you're someone who's traveling a lot, if you're, let's say, an entertainer, if you're an athlete. But for everyday individuals who've now been impacted because of this pandemic, who now have to work remotely for a multitude of different reasons, this really complicates your filing for next year, your tax return filing for next year, because now you have to take into consideration not only your state of domicile, which is where you live, your state of primary residence, but also your state of work, even if you were just passing through, and even if you were there for just a single day for a bunch of states. Now, in case you're wondering, how is the state going to know that I actually did work in that state? Well, it's pretty simple. If your employer has you working remotely from home, they'll know where you're working from because they have your home address. But if you're working from a different address and they ask you where you're working from, the employer will know, and then the employer could report that to the state. Also, when tax preparers are filing taxes, they'll ask the employer where the employer was working from, where the employees were working from. So one way or another, this information is going to be made available to the state. And this is another reason why you need to talk to an accountant before filing your taxes if you work remotely. In fact, data from the American Institute of Certified Public Accountants, which was reported in the Wall Street Journal, highlighted the differences between different states when it comes to state taxes for remote workers. All of these states need money because they have their own budget shortfalls. Many states have elected to keep taxing remote workers. Some states have said that they will not tax remote workers, and other states never tax remote workers to begin with. For example, for California and New York, they expect remote workers to pay state income taxes, partly because the states need the money. Texas and Florida never charged state income taxes to begin with. And early indications from New Jersey and Pennsylvania, they've indicated that they will not charge tax to remote workers. But again, you will need to check with accountants in your specific state. So as you can see, this is a pretty complex subject, and it has a lot of different implications for a lot of different individuals. If you are a remote worker, this video was intended to give you a starting point as to your obligations when it comes to your state taxes next year. I hope this was helpful. I know this is complex, but I tried to simplify it as much as I could. Please speak with an accountant for questions specific to your situation and state tax filing guidelines and protocols specific to your situation, because every situation is different. Thank you so much for watching. Please click subscribe if you learned something new from this video. Please enable notifications so you get an instant update when I release future training videos. And please click the like button, because that really helps out the YouTube algorithm. Thank you so much. I'll see you in the next training video.